Right, we don't have a whole lot of time, so let's get this started. Alrighty. Good morning, everybody. Now, our market is opening pretty high today, which is awesome. Exactly what we needed. Now, with that said, I do want to mark out a few things really quick. Just give me a few moments because there's just a few things I want to draw out. So we do have a micro cup right there. Potentially, if we push down further, we could be seeing, doesn't look very likely. So one thing that I am looking at, everybody, is that on the 30-minute time frame, also the 5-minute time frame and everything, there's this very nice cup built here. Top of this cup reaches essentially this 641.38 range, which very likely we're probably going to push into right up here. Um, with that range, with the top of the cup being at the 642.08, this makes it a very good range to short up in here to create a handle on this cup. But prior to that, I would not be shorting this. There's a lot of really positive momentum in the market right now in terms of the buying and selling. So trying to short this at this 5 mile, I do believe would be a mistake. So we are going to wait a little bit. Primarily, there's this cup built to the 641.38. So ideally, we do want to see that hit first. From that, very likely create a handle and then push upward on the day. So that's very likely what we're going to be seeing. So we will be patient and at least wait for that 641.38 prior to shorting. So that's SPY. That's the goal in SPY currently. I do want to go over kind of everything. Did wake up a little late, so good morning, everybody. Good morning. Seeing some good structure out of Bitcoin today, so that is a positive sign. 5-minute time frame is also showing. I do apologize for this white background, but it's on the longer time frame. But our 5-minute time frame on Bitcoin has this cup and handle, so we should be seeing that breaking out as well. Gig, we talked about last session anyway, how we talked about it's being an extremely low range. It does look like it is trying to create this cup back up to the 79.24. So we will be looking for that on HIG, but that does imply buying to the upside. So that is a bullish signal. Liquid, I want to hide the drawings here for a moment. It's a little weird. We see a bit of a wonky candle in here. Not really sure how to decide that just yet. We'll come back to liquid. The candle is just a little wonky. Yeah, that's interesting. Okay, I want to look at NVIDIA. I want to look at Microsoft. All right, on NVIDIA, very awesome call position here. Um, if we continue pushing down to that 167, It's creating a very large cup and handle to the upside. Now this little cup right here has been invalidated by pushing down. So one thing we're looking for is that potentially this is trying to form the top of the cup here. Okay, trying to form the handle. So we are going to be looking for better boulder structure in this range, but we will be looking for, you know, the cup and handle to the upside overall. And again, this is within NVIDIA. So that means there's going to be a buying opportunity in semiconductors. Very likely there is. Turn off the drawings here. Semiconductors is telling us that there's upside. So within the 5 minute time frame, uh, but within the 5 minute time frame, there is upside all the way from the 324, basically where we're at right now, all the way to the 326.69. So one thing that we can trade is either you could take a short position within success. That would be basically taking a semiconductor call to the upside, or you can take a Soxla call. That's the exact same thing, just taking a call to the upside, or actual semiconductors can take the call. Now, I do want to look at SPY, as we are seeing this push down slightly. So a little bit of an invalidation of this cup here. So we do want to watch this. Now, if it goes all the way to this 637.68, that will be forming an inverse cup to the downside, which does allow us to take calls on SPY. So if we continue pushing to that lower Bollinger here on SPY, that does create some call upside. I will be looking for a short position on success, as those usually pay out pretty well. I will be taking the, let's see, I actually want the 40 puts expiring 3 DTE. So let me go ahead and post that in my chat really quick. Okay, so I got that. Yes, SPY will be a good entry for the call upside. If we continue pushing down further, that'd be great. If not, then that call would be missed. The reason why I'm saying is it's going to be missed if we don't push down further because that would invalidate this inverse um, up. I don't really expect that to happen though. I do expect it to push all the way down to this 637.69. So I will be looking for an entry on calls on that. And with these calls, I am basically just going to be targeting this 640 or yeah, 640 range. Not taking the calls until we push into that lower Bollinger. Starting to push into the lower Bollinger. I am looking for a lot closer to this 637.66. So ideally we would hit that, but continuing to look for our entry. Now I do want to take a look at the VVIX in just 1 minute here. Because I do want to see if volatility is super elevated or not. The VVIX is still very high today, so watch your entry on SPY here because I'm going to circle to the VVIX. VVIX was all the way up to the 134, pulling down to the 130.55. Still super elevated, so be cautious. This can be, again, a selling signal. Do see oil having a pretty large buying day to the upside. So it has pushed all the way close to this 128 range. Now, again, if you did not get to watch the video last night, oil hitting this 129.92 is, basically a decade high level. Um, if that happens, I'm expecting a pretty large rejection with oil. So we will see how that plays out. But so far, the structure on oil is bullish. SPY, we hit our level. So I'm going to go ahead and engage my calls. Okay, got my contracts going. And now I am looking for the upside. So I'm currently in the Stoxus, uh, get this to put. Currently in the Stoxus 41 puts 3DTE. Now I do want to look at a few things because we are seeing quite a bit of selling here. So this inverse cup did play out exactly like we did expect. Now we are starting to pull into pretty decent area of liquidity within the 5 minute time frame. So we do have to be cautious of that because this can form head and shoulders. So we will be looking for that, but there's a big chunk of liquidity here. Now, overall, the thesis on the day still is, I do apologize for all these drawings here. The thesis on the day still is this cup and handle to the upside. Um, we do see some buying on TLT today, which I do attribute a lot to the Bank of Japan. Um, I'm not sure if they had to hike rates or pause them this time. I have to check that, but they are trying to still hike rates. Just to label this call position on the SPY really quick. Again, we're looking for our exit at the 20 MA. 20 MA is currently at the 639.20. So roughly $2 upside here. Just on the 20 MA exit. After the 20 MA exit, if we have any running positions, we will hold those for the upper Bollinger, but also be prepared for a rejection back down to the lower Bollinger. So that's what we're looking for now. Now on the VVIX, it is pulling up slightly, which is somewhat expected. It did pull all the way down towards that lower Bollinger. I'm expecting this to pull down towards the 127 range, if not lower, towards the end of today though. It is going to be a little difficult with oil being this elevated. Oil and volatility sort of go hand in hand. But one of the things that we are looking at with, the whole conflict in Iran is that potentially the road forward is actually going to ease up the pressures at this point. So, um, you know, potentially the United States and Israel having to, you know, move forward in their operations and actually go into Karg Island and everything else could actually be a bullish thing for the market at this point because that could be sort of breaking this stalemate that it is ongoing. Um, Oil is obviously super elevated. With oil being this elevated, it's going to be causing a massive, massive weight across the entire globe. And eventually, you're going to have to get the strait opened, whether Europe steps in and starts helping out, or, we just go scorched earth, but the strait needs to get opened. With oil prices staying elevated this high this long, the likelihood of having an extreme, extreme recession or, massive bear market is very, very likely. Spy calls I took are the 640s, excuse me. I'm gonna post that in chat really quick as well. So trying to get into practice of posting all these into the plays while I stream. And I do want to circle back to the VVIX here. Just make sure we're not seeing anything funky. Okay, so it is pulling back down again slightly. That's good. We will be looking forward to again pull down towards this 127. Do want to look at two different symbols really quick. I want to look at Nvidia, Microsoft, some others. Seeing a little bit of selling out of HIG. I do expect that to head back upward though to complete this cup. So very likely pulling down towards this 20 mile, finding strength to the upside. Now Microsoft have a bit of a selling day. Not completely out of the woods yet, but again, we are seeing this cup and handle structure pretty much throughout the entirety of tech. We do see also very large inverse cup and handle, or inverse head and shoulders, I mean. So lots of bull structure here. Does look very good. Let's check NVIDIA. NVIDIA, a lot of the same here. We are looking for this cup to head upward to the, upside. We do have a bit of a double top here. So we do have to be careful for that. Potentially, if they really do want to take the selling up on the day, we can be heading all the way down to that 164.71. So we will keeping our eyes on that, but I'm not expecting that at all. I want to check what this white line I have on here. Oh, okay, this is a very, very large consolidation channel. So either we're going to break down here to the 164.04, or we're going to have a massive bounce. Do apologize for all these drawings here, but this is based off of the day trades we've been going over, and we did expect a rejection downward. From this rejection downward, we are starting to expect to pull back upward. Consolidation channels generally you trade from the bottom to the top, to the top to the bottom, so this is the standard process of these types of channels. With us hitting the bottom of this channel, there's a lot of reason to start building support to the upside. And this is day two of the lower Bollinger. Um, so we were expecting the lower low out of today into the upside bounce towards the 5 mile. Now, I don't expect the 5 mile to hit today. However, that's kind of the pattern from the slower Bollinger move. Apologize for all the drawings on here. I will clean this up for tomorrow's trading session, but Nvidia is showing some signals of a major bounce to the upside. So that is very bullish. QQQ looking good so far, and I want to take a look at SPY. SPY still pushing down. Let's look at the VIX here. VVIX did tick upward, so it did pull back up towards the 131.25. Again, every single penny that this is elevated, this is super, super, s- major signal that dealers are hedging positions to the downside. So we are looking for a major push to the downside here in terms of the VVIX to suggest that there will be that bullishness to the upside. Semiconductors having a pretty large bit of selling here. If we don't start to see this upside reclaimed, then this is going to start forming a very large inverse cup downward. So look at a few things really quick, because that is a very large rejection to the downside. Nvidia building a inverse head and shoulders here on the 1 time frame. So that does look good. Sorry for all this mess here. So major push downward through semiconductors. Had to be very cautious of that. QQQ. And I just want to take a look at the 1 time frame here. Not really finding crazy support just yet. We are looking for support overall on the day, so we will see. Looking for this to turn into a bit of an inverse head and shoulders here. So we will be looking for that on the 1 minute time frame. And I do want to look at the VVIX again. Pulled up towards that 131 30 range, pulling back down towards the 130.95. Now I do want to check the 5 mile on the day here. 5 mile is at 645.14. So no, we did not hit that level. Now, one thing with the SPY here is that by the technical standards, we did not push the lower low of the day to bottom Bollinger. So technically, the market can still aim for that level before turning bullish here. So we will be looking for that to see if that's going to occur. Hopefully not. Um, that'd be a pretty large downside here, but we will be looking for that to see if that happens. Yeah, they really did grab that liquidity level we were talking about earlier. Over there. So we will continue to look, see if we're going to have an actual bounce or not. See video on the 1 minute time frame. If we have this cup, or this inverse cup close to the downside, that will invalidate the potential um, inverse head and shoulders here. So we will be watching for that. Semiconductors still seeing a bit of a downside. And the BVIX still very elevated, so we may have to be careful with these calls here. I just want to make sure we're not going to get this type of move where we're going to essentially just ride the bottom Bollinger all day on this 5 minute time frame. That would be no bueno, so we don't want that. So we will be looking for structure out of that. BBIX here. Still pushing upward quite a bit. Let's circle back to our semiconductors. Because really this is where all of the selling is taking place pretty much right now. So I do need to figure out symbol besides NVIDIA that is selling off currently. See, Apple I don't care about right now. ARM I don't care about right now. Broadcom I definitely care about. So Broadcom here, we will be looking to see if this pushes all the way down to this 293. Not really expecting it, but we are starting to see quite a bit of selling out of semiconductors, so this is something we do need to monitor very closely. So we will circle back to Avgo. Now NVIDIA. Look at Hig and Liquid here. Hig not really seeing selling so much yet. I will circle back to Hig because so far this is showing bullishness on the day. NVIDIA really does need to catch support. It did validate this prior inverse head and shoulders that potentially was building. Again, this is NVIDIA's day 2 lower Bollinger move, so we are expecting again that lower low. We are seeing it. However, we're hoping that we don't push all the way to this 164 prior to that. So we will be watching the video very closely. Yeah, it needs to find support before the 164.71. So not too much further downside before we can fully close that inverse cup. Semiconductors did close the inverse cup, which that does invalidate this bullish cup here. So that's unfortunate. But I am not exiting call positions yet, so still being patient on that. Now VVIX still pulling upward, so that is getting very scary, especially with Nvidia selling as hard as it is. We are wanting to see Nvidia catch some support in here. Now, the thing that's, I don't know, not really confusing me, but showing me mixed signals is the HIG. If we were really going to be seeing a major selling day, then I would be anticipating the HIG to be actually selling off. Um, so far, we're not really seeing that within the time and sales and the actual shares. I see excuse me, an $800,000 or an 800,000 share buy. Um, that doesn't really tell me that there's going to be massive equity selling going on. With liquid, it's a little hard to say because we had that wonky candle all the way to the 103 and to the 111. Excuse me, I keep yawning. Now, Micron here, seeing a bit of selling as well. Closing this inverse cup here. From that inverse cup closing, should be anticipating a bit of bullishness to the upside. That bullishness would take us all the way back up to the 358, 359 range. So we will be looking for that. Video, we're still looking for support to be purchased out. Then with QQQ, SPY, we are looking for a pull down within the VVIX today. And I do want to circle back to oil because oil is super, super elevated right now. Do want to look at the 1 minute time frame, and I do apologize I haven't had a chance to look at chat too much. So 1 minute time frame on SPY, we are going to be again looking for an inverse head and shoulders here. On VVIX, we are looking for this to pull down. Treasuries are not really telling us too much this morning. Semiconductors did have a pretty massive pull down, but from that pull down, we are looking to hopefully start buying some support. Now, NVIDIA has a lot of room to gain support on. Do you want to look at the 1 minute time frame? So 1 minute time frame, um, continuing to break down just a little bit here. Very likely trying to form this inverse cup. If not, then we can start to look for some support structure out of this. So really need to see buying out in NVIDIA out of pretty much any symbol in the market right now. That's really the one that's holding us back. So we are looking for that. Yeah, the calls are getting beat up right now. I'm still holding them currently though. I still think that there's the thesis of a major buying, to the upside today. So I'm not counting out the calls just yet. Even though they are getting beat up. VIX pulling back slightly here, but still beyond elevated, so we have to be very, very, very cautious. Oil pulling down slightly. And yes, Powell is speaking at 10:30, so he's speaking in 26 minutes here. If I'm able to pull it up live, then I will. We just go ahead and watch that live. So a few signals we're looking for today. Looking for again the VVIX to pull down. Looking for buying out of Nvidia because Nvidia is pretty much the main symbol right now, pulling the market downward. Excuse me. Looking to also not yawn as much so I can wake up today. Going to mute for a couple seconds here just to drink some coffee, but I will be here. Anyway, I will be right back. Alright, so I have our original entry circled, which is in red right here. Was basically right in that range. So we are, again, looking for continued bullish structure to the upside. 1 minute time frame here, potentially giving us this micro cup and handle. We will see if it plays out or not. If that does play out, then it will create this first head and shoulders here, which should start taking us back up towards this bit of liquidity right in here, which would take us back up towards that that 637, 638 range. So while these current calls are, you know, currently dead in the water, I am expecting a lot of that reprieve to the upside. Now, originally the 20 MA was around that 639.20 range. With this selling to the downside, it has pulled down to the 638.40. So the rules stay the same. We're still going to be closing the initial calls at that 20 MA, assuming, we pull upward and hit it. If we have any runners, we will allow those runners to run their course. But currently, that is what we're looking for. Now on the 1 minute time frame, this cup and handle is starting to play out. With this cup and handle playing out, again, this will give us our right shoulder on this inverse head and shoulders. So that is giving us a lot of upside potential. We do need the VVIX to pull down. With this being elevated, this is telling us directly that dealers are hedging their positions to the downside. So we do need to see that start to reverse. So looking for this to pull down pretty largely. And for oil, I don't really expect it to pull down much today at all. The conflict in Iran right now is, you know, we're pretty much at the breaking point of where we're getting ready to send troops to, that Karg Island. So I don't really expect oil to um pull down due to that. So we do have this as a weight against us. Okay, continuing to see this cup and handle and also inverse head and shoulders starting to play out. So we will look for continuation within that. And UEIX has not moved really much the last few minutes. So we are looking for a very large pushdown within the VVIX to signify that there will be buying to the upside. got super cold in my room, so I am gonna go get my heater really quick, but I will be right back, everybody. Alright, I'm back. Sorry about the heater was really buried. Okay, so it looks like we haven't missed anything too much. We're seeing our right shoulder on this inverse head and shoulders starting to play out, and this is on the 1 minute time frame. Um, so with this being on the 1 minute time frame, our 5 minute time frame is starting to show strength. Should be seeing our volatility pulling downward. Let's just confirm that slightly. Um, we need to see a lot further than this. Again, I want to see volatility all the way down towards this 127 range today. So that's really what I'm looking for. I want this thing absolutely beat down. Now, SPY 20 moss still at that 638.28. Nothing crazy there. Semiconductors. See this cup closed. With this cup being closed, you should expect the handle to form, starting to give us that upside. Now, from that upside, this creates a larger, I'm gonna redraw that, a larger inverse head and shoulders, and I will mark this with orange, just so that I don't go insane. And I do want this because that's driving me insane. Um, okay, good. Semiconductors looking good. Now, that also means I want to see NVIDIA looking good. That does look good. However, we still have to be very, very concerned. Okay. Um, with this 20 mile range starting to come in here, which for NVIDIA, that's at the 168.39. So with this 20 mile range starting to come in, this can create the conditions where we can reject to the downside. So we will be watching for that. I'm not anticipating it, but it's something that we have to be cautious of. What I am expecting is this to really create the cup to the upside, um, which would take us all the way back up, basically to the 169.40. So I am looking for that out of the day. Apologize for all the drawings here. It looks like a mess. Okay, so Nvidia's buying up. That is good. That is what we've been wanting to see all morning. Semiconductors, same thing. SPY, same thing here. Now with this cup being completed here, you should be expecting that pull downward, head back upward. So on 1 minute time frame, very likely doing a retest of this 20 MA prior to heading up, but we will, monitor to make sure that it's not going to turn into some massive rejection to the downside. Now our volatility still very elevated. It did pull down to the 131.04 and then started pulling back up again. So it's at the 131.13. This is not a good signal. Um, again, this is beyond elevated right now. We need to be seeing this pull downward if we're going to be seeing actual buying on the day. So on the 1 minute time frame here, we are looking for a bounce to the upside off of this 20 MA. We do not see the upside bounce, then potentially we can be building smaller head and shoulders to this downside. And that shoulders would be right in there. So we will mark that just to have it marked. Not expecting it, but something we do have to be aware of. I'm expecting the upside though. I want to circle back to volatility. Really want to see this down much, much, much further. Q showing us that same cup and handle, very likely forming. So we will be looking for this 1 minute 20 MA throughout the SPY, tech, and very likely semiconductors to be having a bounce to the upside. So on semiconductors on the 1 minute time frame, we are looking for it to pull down towards this 118. So there is still some downside before we fully anticipate this upside bounce. So we will be watching for that. On SPY, that would pull us down slightly more. And our volatility ticked upward slightly again. Oil really does look like it wants to break out to the upside today. Now, as long as we have this bullish structure here, I don't want to be closing out these calls because the breakout of this bullish structure would, pay out the original position that we entered. Um, again, it's just something we have to be cautious of. I want to circle back to the HIG. Now, within the HIG, we've been seeing buying throughout pretty much the entirety of the day after this first rejection. So far, this is telling me that very, very likely we will be seeing, um, a large amount of equity weight bought up in the day. Bitcoin having a bit of rejection of our bullish structure. Um, this potentially can be telling us that we can be seeing further selling in the day. So we do have to be cautious of that. Should be expecting some bullish structure at the bottom. So we should be seeing some reprieve regardless. To circle back to NVIDIA. NVIDIA is still holding bullish structure, so as long as this is holding bullish structure, then I am going to be holding my calls on the day. I want to really want to see our volatility breaking down. Um, this is very, very concerning to me. Basically, I'm torn between the VVIX being very elevated today and also seeing the HIG buying to the upside. Even though technically we did see a little bit of selling within the open, um, that was the gap from the weekend, so I'm not really concerned about that. Um, However, we have been seeing some buying within the HIG today, and that's a huge indicator that the likelihood is we're going to be seeing buying to the upside within overall equities. Now, semiconductors on the 1 minute time frame finally testing the 50 or the 20 month. So we are expecting a bounce from this level. So we will be watching that very, very closely. And I do apologize, I haven't had a chance to look at chat yet. Very tuned in on to making sure are going to get our bounce or this inverse head and shoulders here on the 1 minute time frame to play out. That would invalidate this head and shoulders by creating the handle to this cup. So we are looking for that breakout here. Do apologize for all the drawings. It does look like a mess. A lot to monitor though currently. Now with this chop occurring, and again the speech with Powell is starting in about 8 minutes here, so I will turn that on so we can all listen to it. But the 20 mile has been pulling downward, so with that happening, our exit is still going to be at that 20-mile range. So the exit is still going to be at the 637.91. Um, Even if that means that we're exiting with the calls that we originally entered being red, that doesn't matter. Um, that's still going to be the exit. Now, here's kind of the advocate, take on the day. We're expecting a major bounce today. We're expecting it pretty much closing above this 642 range. Um, Closing the calls at the 20 mile here is obviously going to be the safest play to do when you buy from this lower Bollinger, and especially when we did our early entry here. Closing and securing whatever premium you can get is absolutely the best um possible play to do here. However, we are expecting a large bounce to the upside. That's really what we've been anticipating out of the entirety of today. So potentially you could be closing that call very, very early. Um, there could potentially be a whole $4, $5 upside on those calls at this 20 mile range. Um, so we have to be very, very cautious. Okay. We are seeing this cup and handle structure playing out. We do need to see um this head all the way back up to the 636.82 to fully invalidate this head and shoulders. With the invalidation of this head and shoulders, then it does start to invalidate a lot of the bearish structure on the day. So that is a very bullish um signal if we do hit it, of course. Yep, I still have the TQQQ calls. I still have all of my calls going because, again, with all this bullish structure building, even though we did enter early on the 1 minute time frame, we basically entered right in here. Um, we really do want to take a profit on the day. Now, let me really preface this. For a lot of traders, taking profit means being green on the day. That is not always how it's going to be, okay? There are going to be some days where, like today, we enter early, and potentially, what if they chop it for the rest of the day? Well, you don't want to be holding that call to zero, okay? That's the absolute worst case scenario. Um, you want to at least get some premium back from this position. Um, whether, let's just call it, say you entered and it cost $100 for this position. Would you rather have $40 out of that position that you entered, or would you rather it turn to zero? For me, I'd rather that $100 turn into 40 or $60 than zero. So that's how I try to think about these early entries, even if the upside is very large. Now, what we can do is, yes, we entered early. We are seeing all this bullish structure and we are anticipating a very large breakout on the day. What we can do is once we secure this level again, simply just take a put right at that range, and now your downside is fully secured. Okay. And it allows you to profit off of that upside too. So that's what I will personally be doing is once we head back up towards this um, you know, 20 mile range on the 1 minute time frame, it's well above that, but on the 5 minute time frame, it's going to be around that 20 mile. Excuse me, around that 20 mile. I will be hedging a put just in case we head back down to the downside. That way I don't have any losses or, further losses if we're going to get completely burned on the calls. Then I do want to be able to profit on that put. So, um, hopefully that makes sense. But when we enter early and we start to see structure building our way, sometimes it's better to just straddle that position rather than to take the profit and watch it run. So, hopefully that makes sense. Now, I do want to look at the volatility again. It is still not going away. It's still just holding that super elevated position. Now, semiconductors here went from the lower Bollinger all the way from that 115.66 up towards that 100, or that, I don't know why I'm saying 100. It's 315.66 to the 320. And from that 320, starting to reject again. Now, what we are looking for is that, are we going to see this rejection all the way back down to the low of the day? Because if that's the case, then that is telling us that we will be seeing a fairly bearish day. Or are we going to start seeing this find support here? Because if we start finding support here, and this is the 1 minute time frame, then this doesn't invalidate this prior cup. This still holds this handle on this cup. So that's what we are looking for here. And I do want to open YouTube really quick. Hold on one moment. I want to pull up. Let's see. Okay, so I do have it live. I don't have the volume on just yet. I'm gonna turn it on after it stops playing all this white noise. Um, or just people in the background. So give me 1 second. I want to set that up. I'm gonna have it so it doesn't completely cover our screen. So we will just have Powell up in the corner. Yeah, up in the corner works. Okay, so I will turn the sound on that once he starts speaking. Now, if the sound is loud, I do apologize. So when I do turn it on, I will give you all just kind of a little heads up prior to turning the sound on. So um that way we can, I can get it adjusted and everything. So okay, semiconductors potentially seeing this breakout, which is something we are looking for. Why I have a ton of drawings on the day, I do apologize. Go ahead and delete some of these just so that it is a little more reasonable to look at. We are seeing a lot of bullish structure in here, so this is looking very, very good. Now, Powell has not started speaking yet. Again, I will turn that on, or we'll turn the sound on when Powell actually does start speaking. Look at NVIDIA. NVIDIA selling pretty hard here still. However, on the 1 minute time frame, still potentially be seeing this inverse head and shoulders. So we do have to watch this very, very closely. Our volatility is at 131.02. So still extremely elevated, but did pull down very, very slightly. Out of NVIDIA, we are really looking for a bounce here. So looking for that to play out. We did see bearish structure at the top of this cup like we anticipated. Now we're expecting to see the bullish structure to break us out of that range. That's why this should lead to a breakout as well. Do have this micro cup and handle, and I'm going to redraw this. So we should be expecting a smaller handle. Let's see, got some clapping now. Audio on this is terrible. Okay, I'm going to turn the audio on, so I do apologize if this is loud. I'm going to adjust it. Okay, so let me know if this is too loud or too quiet, everybody. Can't really tell on my side.
Chair Powell's path to the pinnacle of economic policy was not paved with mathematical modeling in an economics doctoral program, but rather with a deep study of institutions and laws. Raised in Washington, D.C., he attended Princeton University, where he earned a Bachelor of Arts in Politics in
Can you guys hear the
1975.
volume?
He then attended Georgetown University Law Center. While earning his law degree,
Also, for
Also
SPY, to
served
answer that
as
question, we can still
editor-in-chief
see the
of the
day
Georgetown
two
Law
lower low.
Journal, one
We
of the
did see
world's
that in the
most
pre-market,
influential and
but
prestigious legal
currently,
publications.
um,
He then started a career of
so
extraordinary
far it is
impact
saying
and
that
breadth.
we are not going to see that in the
He
intraday.
distinguished himself first in the private sector, working in investment banking and private equity, notably as a partner at the
Bit
Carlyle Group,
quiet? Okay, let me turn
while
it up.
repeatedly answering the call for public service. He served with distinction as Assistant Secretary and then Undersecretary of the
Is
Treasury
that any
under
better?
President George H.W. Bush. In 2012, he returned to public service as a member of the Federal Reserve Board of Governors. His nomination to serve as chair in 2018 by President Donald Trump, and then his renomination to serve as chair by President Joe Biden in 2021, stand as testaments to his
Much better?
bipartisanship.
Okay, good.
Chair Powell approaches economic stewardship with a philosophy grounded in empirical evidence, institutional humility, collaboration, and
Invalidation
public
here.
service. Like the greatest Fed chairs in our history, Paul Volcker, Ben Bernanke, Chair Powell advances the interests of our nation
Do you have a
and not
spike
his
in
own,
volatility here?
sometimes at great personal
I have to
cost.
be careful of that.
We are immensely privileged to have him share his
See a
insights
breakdown
today.
of semiconductors here all the
Please
way.
join me.
So we do have to be careful of that.
No matter your mission, we can build the stack to solve it. Each layer designed, built, and deployed to serve the people who power this country.
So I'd like to start at the beginning of your career. You studied politics and then law, and then eventually pivoted from that to public service. Were you thinking about public service and economic policymaking at the start, or did all of that come as a surprise later? And how did you decide to make the pivot when you were in the middle of your career?
Let me start by saying, David, thank you so much for having me, and thank you to all of you for being here today. It's great to be here. I've been looking forward to this. Yeah, so I took macro and micro my freshman year, and it wasn't as interesting to me at that age than some other things, so I wound up majoring in politics, actually specializing in Africa. It's fair to say that my freshman major was acoustic guitar.
Is it okay now?
My parents gave me a Martin D35 for high school graduation. They must have regretted that because that's what I was really working on mostly. But I did finally figure out what I wanted to do. And when I graduated from college, I really had no plan, but I did have one thought, and that is to have a career in the private sector, but also to do public service intermittently. And I was thinking about people like George Shultz, who was famous at many economic
Up a little? Okay.
and others who had done those sorts of things. And I grew up in Washington, D.C. My parents were not, my dad had fought in
How
World
about
War
that?
II, and he had been a U.S. attorney, but they weren't people who were terribly plugged in politically. I was very interested, though, in those years in public policy and in trying to create a life that was partly private sector
Not too low.
and partly public sector, and amazingly
Okay,
enough,
let's
that's
see.
kind of what happened.
Great. So
Let's
now,
try there.
jumping right to the present.
No, there's
we
still good
talk
trades for
about the
today. Don't worry
Fed
about that.
as a unitary entity, but of course, the Fed is led by the Federal Open Market Committee. There are 12 voting members. You, despite being chair,
Okay, this
only
sounds
have
good now?
one vote. And
Testing,
in normal
testing.
times, there's a lot of consensus. Everyone's in agreement.
Okay, great.
Lately, there's been some disagreement. There's been votes to keep interest rates the same, but some members of the FOMC have decided
Yeah, I
instead
think
to
I
vote
think
to
this
decrease
conference is
interest rates.
just
How does
um
the
a
disagreement
Harvard
on the
speech.
FOMC make your job harder as you describe the path of economic policy going forward?
You know, I don't think of it as making my job harder.
A lot of
I think
liquidity
it's, and
here
I've
on
found
Bitcoin to
throughout my
build.
career that when you have a really difficult problem, it
Big is
helps
still
to hear
buying.
from all sides. And in a way, for example, when I was a
One
private
second.
equity investor and I was looking at supporting a transaction that I wanted to do, I really wanted to hear from the smartest people. Tell me why it's a bad deal. Tell me now before we do it. And I just think you don't really know how much you believe in something until you've had somebody really try to take it apart. So I welcome that at the FOMC and at the Fed generally, and I think it helps us make better decisions. The Fed has had a tradition of, of governors not dissenting, but that's really not typical of other major central banks where there's more dissenting, or I mean, they're different, depends on the central bank. And to me, what matters is the dissent
still
thoughtful?
very
Is it
elevated here.
helpful? Does it help? Does it express a point of view? Can you stand behind it and say, yeah, that's very thoughtful? And that kind of a thing is not bad. And it doesn't hurt with communications. You know, I think a situation like the present situation where, you know, there's sort of downside risk to the labor market, which suggests keep rates low, but there's upside risk to inflation, which suggests maybe don't keep rates low. You've got tension between the two objectives. And I think to try to expect unanimity at a time like that, where it's really quite historically challenging, it would almost be misleading to be really confident in which way that should go. In fact,
really
it's
good
been
for a
said
bounce.
that confidence is what you feel before you really understand the problem.
Okay. Let's turn to the Fed's balance sheet. In 2008, 2009, that great financial crisis, there was
Breakdown
a
in
massive
QQQ.
expansion in the Fed's balance sheet. And then again in 2020, under your leadership, there
From
was
this
a
breakdown,
second
we should expect
vast
bullish
expansion in
structure.
the Fed's balance sheet to address these two economic and
If we're
financial
going to
crises.
head down further.
The
So
balance sheet has since come
will be
down a bit,
watching
but it
that.
still sits at over $6 trillion. So I'd like to hear your views on how efficacious this vast bond buying program has been, both in the 2008 and then again in the 2020 episode, and also hear your reaction to the critics who say that the Fed has become too big a player in the bond market.
Really
The Fed has
looking
become
for
too
volatility to
influential.
break down.
There's been a muddying of, as according to the critics, of monetary policy and fiscal policy. Do they have a point, or are they wrong?
So I think the place to start with that is the problem that people were struggling with from about 2008 to 2022, let's say, in central banking everywhere in the
potentially
world
is going to be
is
breaking down here
once you
further.
cut interest rates to zero, do you have anything else you can do? Let's say you cut interest rates to zero and the economy is still clearly not flourishing and it wants more
Very
it wants more
difficult
support.
because we're still
So do you
seeing
just say, well,
bullish structure
we're
out
done, we're out
in the video.
of ideas here. And there were two ideas that
long as we don't
were
see this
followed in the
breakdown.
global financial crisis, one of which was to buy assets, longer-term assets, and what you're doing there is you're buying longer-term government-guaranteed securities, which would hold down longer-term rates, and that should stimulate the economy, or also forward guidance, which would tend to hold down forward rates as well, or just rates generally. So we did those two things rather than do nothing. And I think in the first instance, they were both efforts were successful at restoring market function and at restoring financial stability. At the beginning of the global financial crisis and the pandemic, we had massive problems of market function. They were solved. I think the question, getting to your question, David, of the macroeconomic effects is a much more, much less certain question. I don't think there is an accepted answer, but I would just say there's an oceanic quantity of research on this, and overall it tends to find that buying long-term assets does
look like
lower
it's gonna
interest
break
rates
down.
and does provide some
The
support
micro
for
cup right
economic
there
activity. And
should
I guess I'd be in
form
the camp of thinking that there's
another micro
something
cup
in that,
getting a handle to
but
the
it's hard to
downside,
quantify it. And I think, you know, different people have different
which
views
is
on how
very
much
hard
those
to
effects
exit these calls
could
when
be. The other side of it is, you know,
we are
QE
expecting
is
the
thought
upside
by the
break.
critics to risk all kinds of other things. So, for example, you could buy too much of the treasury market and it would stop functioning well. We have not seen that here. At the very beginning, there was the thought that it would be inflationary. We have not seen that, or that it would threaten financial stability or even create inequality. So we haven't really seen the downside risks. At the same time, the last thing I'll say is, I remember before I took over as chair thinking,
with this inverse cup
almost
closing,
certainly never have to do quantitative easing. So what's that expression? Man plans and
we should
God
be
laughs,
expecting a
like
bit of
that.
a reprieve here.
It just, you know, the pandemic
to
came
continue
around
to build
and we needed to do a
inverse
lot of
handle to
asset
the downside
purchases in a
if we're
big
going
hurry,
to be
and we
seeing
did.
downside.
So far,
So I do want to exit my calls
no Treasury Department
in
has
that
ever
handle.
said, stop doing that, you're
So
supporting the
that
economy
is
too
when
much.
I will
Maybe
be
that'll
looking
happen
for
someday,
the
but it
call
hasn't
exit.
happened yet.
So let's talk about the dynamics of inflation since the spike in 2022. Inflation has been coming
Volatility
down
is still
since
just
then, but it
elevated.
still hasn't reached its 2% target. Some
You know,
have
potentially
argued that
SPYs is
that
going to
last
be
mile is
breaking down
extremely
here and
difficult,
giving
and
us our lower
to
low on the
obtain
day,
that, we will need a
which is kind of
recession.
like that
Others have
one
argued
session
that
last
you've
week
gotten us
where we
very
had
close
much of the
and you'll
similar
get us the rest of
situation.
the way. Are you concerned about the time duration of the path from the high inflation of 2022 back to target? It's taken time. We're not there yet. Is that a destination we'll reach, or are you concerned that the last mile will prove very difficult?
So we will
So at
reach,
this lower Bollinger,
the FOMC is and will continue to be
if we
committed
can
to
get
getting
down here on the
inflation back
5-minute
to
time frame,
2%
I
on
will
a
be taking
sustained
calls there
basis.
again.
That's the place to start. So I feel like we had pretty much gotten there at the end of 2024 against the predictions of almost the entire
I've not exited
economics
the current
profession.
calls. Again, I'm waiting for a
When we
little bit
raised
of a
rates
reprieve
a
here
lot and very quickly in
within this inverse
2022,
cup.
100% essentially of economists were forecasting a recession. We didn't have
EVIX
one.
still very
Actually, we had
elevated, ticking
23 and
upwards
24 were
slightly.
both very strong years as the supply side healed and as our higher
Our
rates had some
ADL
effect on inflation.
pulled down
So
earlier in the day, was
by
starting to pull back up,
2024, you had the
pulling back
economy
down
growing
again.
at 2.5%. You had inflation
However, it's not
in the 2
where
plus
it
a few
was towards the low
tenths
of the day.
on a 12-month
So
basis
that
by the
can
end of the
be
year. And
an indicator
you
that
had
there
the
can
employment
be
market, you still
buying
had the
to the
labor
upside,
market
even though
at
it looks
essentially full employment. So I would call
very
that a
much
soft
so like
landing.
selling.
We had it there. Then since then, we've had to face a much smaller source of inflation, which is the tariff inflation is visible, and we think it's really just a one-time price increase. That's been our thinking since the beginning. Right now, we think it's adding somewhere between 0.5 and a full percentage point to inflation, but that's a much smaller thing than we saw during the pandemic inflation. And and of course now we're facing events in the
The
Middle
inverse
East,
cup
which will
actually did
certainly
not
affect
fully close, and
gas
we're
prices.
starting to see a little bit of a bounce here.
We feel like our policy is in a good place for us to wait and see how that turns out.
I do want to circle back to
Let me
NVIDIA.
turn to the current crisis in the Middle East and the effect on energy prices. Indeed,
NVIDIA
this
as
classroom
well,
is
we did
familiar
not
with that
see
question
this
from the
inverse
last
cup
problem
close to the
set,
downside.
where we asked, how would you advise the Fed to respond
So
to the
technically this
rising
is still
price of
holding
oil?
a
And
bullish
we
structure,
teach that
even
when
though
there's a
on the
demand
1-minute time
shock,
frame,
it's a pretty
this
natural
looks like a
set of
very
recommendations
gnarly
that
head and
emerge for the
shoulders.
Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed
Still
has
looking
to
to the
juggle.
upside though.
How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece?
Well, maybe they should tell me. Sure. So you start with what you said. Our tools work on demand. Higher rates will tend to moderate demand. Lower rates will tend to stimulate demand.
This is potentially
and when you have a
that
supply shock,
handle on that inverse
our tool
cup.
doesn't have meaningful shorter-term
But we do need to watch it very closely.
So when you have a supply shock, the first question is, do you respond to it? And the
Volatility
classic
is
question
ticking
has
down
been around
slightly,
energy.
but still super
Just
elevated.
in general, I'm not really speaking about the current situation, although I'll get to that, I guess. But
Potentially starting to see
energy
this
shocks have
inverse
tended
cup
to
being
come
broken.
and go pretty
So
quickly.
this is kind of
Monetary policy
why I
works with
didn't
long
want
and
to
variable lags
calls yet.
famously. And so by the
Because
time the
even
effects
though we are
of
seeing
a
bearishness
tightening
within the
monetary
day,
policy take
um,
effect,
and there we go, we have
the oil price shock is probably long
closing
gone.
of that
You're-
inverse
you know,
cup,
You're weighing on the
or
economy
of this
at a
bullish
time when
cup,
it's
so
not
it
appropriate.
invalidated that
The
previous
tendency is to
bearish
look
cup,
through
which
any kind of a
now
supply shock, but a critical, essential
creating
aspect of that is
a
you
double
have to
bottom on the
have to
day.
carefully
So
monitor inflation expectations
as bearish
because
as today
you can have a
was,
series
all
of
of a
these
sudden
supply
now
shocks,
we're in
and
bull
that can
territory
lead,
again.
the public
Um,
generally,
with this cup
businesses,
closing,
price setters, households,
you should
lead them to
expect
start
a
expecting
handle
higher
from this cup
inflation over time. Why wouldn't they? At the end of a certain
to
number
break
of
out to the
years, the
upside.
inflation is
So
now just
we
just
should
higher.
be
That can
anticipating
happen.
a
So
pull
you
downward
monitor
to
that
pull back up.
very, very carefully. Also, in the current
On
situation,
the 5-minute
you
time
have to
frame,
be mindful of the whole broader
this was
context. And
that
the
20
broader
mod
context
test.
is
I
we're
did not
still,
exit there.
we've been
I'm
coming down
expecting
close to 2%
a lot further out today.
post-pandemic, but we've never actually, gotten right and stayed at 2%. So it's been a
Volatility
while.
starting to pull down pretty well.
And we're very
Again,
mindful
we
of
want to
that
see
fact.
much further down.
Inflation expectations do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of
Starting
what
to
to do
buy
here.
upward.
We're not really facing it yet because we don't know
Do
what
want
the
to see
economic
this
effects will be. but we'll certainly be mindful of that broader context when we
Prior
make that
inverse
decision.
cup and potential head and
You've
shoulders
been a
invalidated.
powerful and vigorous
So I'm just
defender
go up to
of the
168.
independence of the Fed with respect to monetary policy. You've also been collaborative with administrations
Yep, I'm still
with
holding
respect
those
to
calls.
financial regulation. So under President Biden, you worked for, or you collaborated in a program of increasing
As
regulation.
long as we're seeing this
Under
bullish
President
structure,
Trump,
I don't want to be
worked
exiting.
together to reduce regulation.
Even
So
if
on
the
the one
day
hand,
is
we've got
sketchy.
an independent Fed with respect to monetary policy, and on the other hand, we have a collaborative Fed with respect to
And overall,
financial
we're
regulation.
expecting a very, very large
I don't think
bounce in
there's
the
a
day.
tension there,
So
but can you explain to
if
us
we don't
those
have
two different
our
approaches
massive breakdown,
and how you
then
understand them?
we should be seeing
Yeah, so
a large majority of the
start with
selling
monetary policy.
bought
You
up
know,
on the
I think
day.
there's
So
pretty broad consensus in
really
both
what I'm
political
looking for.
parties on both sides of Capitol Hill.
Pretty much
And our oversight, by the
buying
way,
this
is
entire level.
Congress, not the administration.
Or
But pretty broad agreement that on
we
monetary
reject
policy, the Fed needs to be fully
down to
politically
the
independent, not reactive to political
632.
Things at all. We just need to do our job and stick to our knitting. Regulation is a little
those
bit
are the
different,
two levels we're
especially
looking
since
for, really.
Dodd-Frank, where the Dodd-Frank Act created something called the Vice Chair for Supervision, who has a specific statutory assignment, which is to oversee all of supervision
Now
and
our
also set the
volatility
agenda for regulation. So the Vice Chair for Supervision,
back up to the
if
130,
she wants to
131, I mean.
propose a change in, for example, the Basel III Accords as implemented in the United States, she has to bring that to the Board of Governors, which is the 7 governors,
I'm going to
and
delete
vote for it.
this
But she has
cup and handle,
full
even though
control
we're still
over-
going to be
over
keeping track of
supervision.
it.
So as chair,
I
you
just
know,
want to be able to see.
the whole idea is to be non-political and not,
We are expecting a
never
pretty
working for
decent
or
bounce here
against
to the
any
upside.
political party or individual, or never
This
even
bounce
considering
should take
things
us
like
all the way
that.
back
So
up towards that
I
637
think the way
range.
the law works is the chair should allow the vice chair for supervision to carry out the role that Congress has assigned to that person by statute. And that's what that is. So you'll see, and the two parties really have a big difference on regulation now. So I like to think that the chair should always be someone who is working without regard to political, and should be therefore a person who can be reappointed by either side. That's always been the case. It's been, Ben Bernanke was reappointed, I was reappointed. And I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan. I think that's a critical thing. So if
looking
you're
for the
going to, if
breakout
I
here
were
on
to
this
try to
handle.
impose my personal views on regulation, that really wouldn't work. So I think there's I don't want to say deference, but any chair needs to let the vice chair for supervision take the lead on those issues, and then I'm another
Once
voter,
we push up
is what I am.
slightly higher, I will be taking the
So
hedge.
let's talk about Dodd-Frank and the reforms to the
currently
financial
I'm not.
system. 2008 was a
Might be a
terrible
mistake,
crisis, and
but-
there were many efforts made in the years afterwards to tighten the bolts and create a safer financial system, less prone to these kinds of cataclysmic events. But today we look out at the world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system, which is lightly or not at all regulated. So I wanted to have your
And we're still
thoughts
seeing
on
buying within the
whether
HIG.
we're in a position of
Still seeing
relative
buying within
safety
liquid.
after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually have brought us to another period of concern. And just to illustrate
I'll
with
be
a
right
couple
back in
examples,
just like 1 or 2
inside the
minutes.
banking system, there's
Just gotta
commercial
get my
real
daughter in
estate
the car
that
really
has
quick.
fallen in value. That affects
But I
both
am looking for the
banking system
upside
and
breakout.
non-financial
To take us back
non-banking
into
financial
this
institutions.
green liquidity
We have
range.
the private credit market and a
If
very
you're in
active
calls and
debate
you're still
about
holding
its
calls,
health.
then
We have concerns about
hedging is definitely a good
cybersecurity
idea,
in the age
because
of
our
AI.
downside can
You
be
worry
this
that
632.
another financial crisis looms
you know,
out there.
I'd hate
Of
for that
course,
to happen.
There's always a possibility,
We
but
did expect
is it something
a
that's
bounce
issue of high
sooner.
alert, or
However,
do you feel that we're
our
putting
bullish
all the
structure is
pieces
still
in the
very
right places?
present.
You
As
know,
long as we
after
can
the global
see
financial
volatility
crisis,
defeated, then
we actually
we
started
will
a
see
new
our
division
upside.
called the Division of Financial
Our
Stability,
upside
and
is
their job
very
is to
large
be,
today. So
sort of
Okay,
the
I will be right back in
watchers
just
of
a
all
couple minutes,
financial
everybody.
stability issues all the time. So we're not. The old system was a crisis arrives, we get the team together, and we battle the crisis. This is much more of an ongoing monitoring thing with a framework that can be checked. So I would say after.
A plush heel and tongue work synergistically to deliver a premium step-in experience.
Look, whatever that means, it's a comfy shoe. No heel slips, no lace bites.
The engineered mesh upper uses strategic hole patterns to channel air for heightened breathability.
Okay, sure, your feet won't sweat, or at least not that much.
In conclusion, the On Cloudrunner 3 is a versatile, high-performance daily trainer, enhanced by stability features to combat overpronation.
Look, it's a nice, comfortable stability shoe. Great for daily runs or walks. Go say hi to your favorite fit experts at Roadrunner Sports and they'll get you the perfect fit. Love those guys.
Capital markets sector relative to the banking sector. The other countries still have a much bigger banking sector relative to their capital markets. And, you know, that's going to be less well regulated, and that's a good thing. You want it to be the place where biotech companies can do IPOs, and they may or may not succeed, but they can get capital out of that market. And you know you're taking a lot of risk, but great things happen because people put money into biotech. So we've done some hardening of that, but we shouldn't be trying to regulate risk out of existence. So I think, and we did fix some of the things that broke in the global financial crisis and the pandemic, we did address. The real thing, though, is the economy, the financial sector is just always evolving rapidly. And I think the vigilance is what you need. You just need to always know that there's another thing coming. And I think in particular, we've had all kinds of financial crises, but we've never really had a successful cyber attack on a large financial utility, let's say, or financial institution. And that would be quite a different thing. You know, if people are going to lose money in a certain part of the economy, we have a hugely resilient financial system now. It's more, let me say this, it's more about resilience than it is about avoiding crises. One of our former people used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature of it will be. So you want a highly resilient financial system, and we do have that. But again, nobody who's in that business will ever give you a green light. They'll always say, here, these are the risks, and we got to monitor. You mentioned private credit. So private credit is something as you guys are probably following. It's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it for looking for things that might lead to greater contagion or greater losses or connections to the banking system. And you know, we're going to do that. Again, you're not going to hear people say, "Oh, there's no problem here," because that's a jinx. But nonetheless, it's something that we're following very carefully.
What is one of your biggest regrets in your time as Fed chair? And on the other hand, what is something that you're very proud of?
You know, on regrets, I don't allow myself the luxury of that. I think it's really important that in my job, I'm focused on the windshield and not the rear view mirror. And so I don't. I'm tempted to say regrets, I've had a few, but then again, not so many, or whatever the line is from that Frank Sinatra song. So I just think I'll have plenty of time for that after I'm out of this role. But honestly, you just have to keep looking at the next thing. You can't be berating yourself for the mistakes that you've made. You're going to make mistakes, and you're going to learn from them. Take it from an expert. I've made plenty, but I don't focus on regrets and things like that. You know, overall, in terms of what I'm proud of, I'm more than happy to talk about that.
Let's go for it.
Yeah, let's go deep there. Basically, I'll just say it's an incredible honor to do public service, as many of you will find out at some point in your life. I always wanted to do some of it. I saw these people around Washington who were well-known public servants like George Shultz. I would think that looks like a really interesting thing to do. It's different, you know. In the private sector, I love my years in the private sector, but there really is a feeling of what you're doing is ideally helping all Americans and that kind of thing. It's a great honor to serve, the public, and particularly in a job like this. So that is the main thing I'm proud of is, 14 years at the Fed and 8.5 of them as chair. I'll always be proud of that.
And I'm very grateful to you for your service to our country.
Thank you.
So if you were willing to share publicly some advice that you would give to the next Fed chair, we'd love to hear it.
So one thing you will learn when your children are grown up and they have their own children is never volunteer advice. Only give advice when asked. So, and I would only give advice if asked, and I would do it privately. But I'll just say in general a couple things about the Fed. It is very, very important to stick to your knitting and to stick to the things that were actually assigned. And there's always a temptation to want to move into other areas. And I think we have very powerful tools. They're supposed to be for maximum employment and price stability and financial stability. There's always a time when an administration looks and says, it would be good to use that tool for something else. What if we were just to and call that that's part of the mandate? Happens all the time, and we just have to be in a situation where we're not trying to we're not trying to work against any politician or any administration, but we have to be careful to stick to what we're doing. The other thing is, I'll just note that the Fed's not a perfect institution. Don't look for perfection. What we do is very challenging and highly uncertain, but it's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary right across the board, an incredible group of people, and I'll just close by saying it's very hard to build great democratic institutions and much easier to bring them down.
So, though you were uncomfortable giving unsolicited advice to your successor, I know that the students in this room would love to hear your advice. They've asked me for my advice and asked me what you would advise them. So they're entering into an uncertain time, an economy where new job formation is lower for many reasons. In particular, jobs that were plentiful a couple of years ago for students coming out of college are no longer so. And AI sits as this remarkable technological transformation that is both promising and existentially threatening. So if you're advising the 600 students that sit here today, what would you suggest they think about as they embark on both academic and then ultimately professional careers?
Let me start by saying that I'm well aware, and my colleagues too are well aware of the current situation for students coming out. It's a time of very low job creation. And also you have AI going on. You've got the effects on job creation of significant changes in immigration policy, which have brought down both demand and supply of workers. The unemployment rate is really low, but that doesn't help you if you're coming into that kind of market. So it's a time when there's a business cycle, right? And you're coming out in the business cycle at a time when getting hired is a little bit challenging. There's also probably something more longer term, more secular that's happening and around technology and AI. So yes, it is a challenging time, but I'll say a couple things. One just is that the US economy compared to other major open economies and big market-based economies around the world is just incredibly dynamic and productive. Since World War II, US, compared to other, again, large mature economies, our productivity has grown at like twice the speed, for example, in Europe, and higher productivity is the way, compensation and earnings can grow over time. So it's an incredibly flexible and dynamic economy. It reinvents itself. Technology, it always comes from the United States. So just be optimistic about the medium and longer term. I'm very optimistic about the medium and longer term. The other thing is, my observation is that these large language models make people much more productive. I feel like it's making me more productive because I can learn things really quickly. And I talk to my son and others who are out there in the world, and I think if you use it well, it's making you more productive. So I think you're in a situation where you need to invest the time to really master the use of these new technologies, and that should stand you in good stead. But there's no denying it's a challenging time to enter the labor market, but it may take some patience and all that. But in the longer term, this economy is going to give you great opportunities, and just be a little optimistic about that.
So when you talk about the longer term, are you talking about 10 years, 20 years, 40 years? Are you worried that there'll be wind at our back as we use these tools over the next decade, but at some horizon, let's say 40 years, there'll be substitution rather than complementarity?
You know, it's so hard to say. I mean, a lot of people, you talk to business people, are talking about, you know, the sort of the next few years being big years for AI to come in, but they're mostly talking about existing, you know, middle management, back office jobs and things like that. I don't think it shouldn't have those kinds of effects on people who can use AI well and that kind of thing. I don't know, but so certainly the next few years look like whatever the effects are, we'll start to feel them, because major US companies, and we talk to a lot of those people who run those companies, and you know, they're all looking at what they can do, and the truth is they can take out a lot of jobs that can be automated by a very smart large language model. They just can, and they will. Because their competitors are doing it, and they can't afford to have higher costs than their competitors. What's that going to mean for you? It may not mean that much. It depends on what you're going to wind up doing. You know, you may stay in school a little bit, and you may do something that is, it's going to create new jobs too over time. And again, it makes people more productive. I did talk to a CEO in tech world who said the marginal benefit of a new employee in this world is actually very high. Now, that's not what you hear all the time. So. I don't know. I mean, when, you know, if you look back through history, to generalize, this has been going on for a couple hundred years. This, you know, since the loom was invented, right, and to put all the people who were doing weaving out of business. But so, in all cases, it has wound up raising productivity and raising living standards as long as the society keeps producing people who have the skills and aptitudes to benefit from that technology. So. That will be the case here, but you're right, there can be a period during which it's challenging, and this may be one of those, but nonetheless, I would just say it's out there, and it's out there to be done, and I would be medium and longer term very optimistic about this economy compared to any other economy.
Terrific. Thank you so much. We're now going to open it up to your questions. So I think I've got Jason and David in the well, and I've got two microphones in the balcony. Why don't we start with, Jason, do you have a question?
I think I have a question.
Okay,
if that's
great, fantastic. We're gonna let Jason ask the first question.
Uh-oh.
So, Chair Powell, when you're making decisions at the Fed, I'm curious, how much are you relying on very specific economic models? The Fed has its own big fancy model, FERBIS. How much are you relying on information you get from talking to people out in the real world, to businesses, your own intuition and experience? What do you bring together as a way of thinking about these decisions with a role of economics, but everything else that feeds into it?
So it's really all of the above. We have to start with the perimeter. You know, the reserve banks are in touch. They're in all 50 states, right? 12 reserve banks, and they bring summaries of these extensive conversations they have with the public sector, the private sector, universities, healthcare, everything in their district. And we see all of that in the beige book and in the meetings. We get all of that. We also look at several models. It's never just the FERBIS model. It's many, many different models, and we look at different alternative simulations. You look at all of that, and then we look at where our policy stance is, and we look out the window and we say, does it look like our policy stance is affecting the economy in a way that moves us closer to our goal variables or keeps us at our goal variables? You do all of that. We also talk to each other. You know, I talk to the other 18 participants on the FOMC a couple of times each cycle, and people have different thoughts and ways of thinking about things. Talk to the senior staff. You know, they've been doing this longer than any of us. So all of those things go into it. I wouldn't say, you know, I mean, so a good analogy is when I was in the private equity business, we had really good models of companies, And my big boss said, we want to have the best model in the industry, but if you think that model is going to make the decision for you, you're in the wrong business. So the models are just illustrative. We cannot model the US economy with the kind of precision that we will never be able to probably. It's like modeling the weather. You can't predict it 2 months away. So it's all of those things, Jason.
Thank you.
Okay, so David, why don't you pick the first hand, and then Jason, you'll get the second hand. And then we'll go to the balcony, so looking for someone upstairs.
Hi, my name is Fabio. I'm a first year studying economics and government. I'm really interested in kind of the decision making in the Fed. How do you work with situations where like the decision might be very tight and like sometimes there's like expectations of like the interest rates increasing or it might be very tight in those very tight decisions. Like how do you end up making the decision?
So remember, I'm one of 12 voters. So there's an FOMC cycle is about 7 weeks between meetings. We have 8 of them a year. So, and I would say sort of 3 weeks before the meeting, by then I have to have a pretty good sense of what I think we need to do. And staff will already have been working on, if we're doing anything in particular, we always have like a special topic. So a lot of work is going on. So I almost need to make a decision about the probable thing we're going to do. And then I have to talk to everybody a couple of times because I got to get people to vote for this. And I've got to, a lot of it is finding out where the sentiment of the committee is. I've been working with these people for many years, so most of the time I kind of know how they'll approach a problem. That's how it works. So it's a lot of talking and listening and understanding. I think an underrated skill is in listening to people. Listening is, if you listen to people and you hear them and you can make their argument and they understand that you're actually listening to them and not just, communicating at them, for most of the people, most of the time, that's going to be enough. And by the way, that's true on Capitol Hill. That's true. It was true when I was a governor. If I always felt like Ben Bernanke or Janet were listening to me, and if they could engage with the points I was making, then I felt like I could support what they wanted me to support. So it's a lot of that, though. I mean, it's a lot of committee management. That's the big part of it is to have active dialogues going with all of the FOMC participants, and by the way, also with all the senior staff who've been doing this a very long time, and they bring, in many cases, they bring history going back many years. For example, in the public communications that we make, somebody who's been doing that for 30 years will tell you don't use that word, even though that word might make sense in another context.
Okay, over here.
Good morning, Mr. Powell. I wanted to ask you a bit more about...
Red Robin has just what you're craving. Gourmet burgers and Donato's pizza, loaded edge to edge with 100 pepperonis. Gourmet burgers and Donato's pizza under one roof, that's how we roll.
Red Robin. Yum.
Organizations and from all the banks, the supervisors are well aware of what the bank's exposure is and what is not. And I'm reluctant to say anything that suggests that we're dismissive of the risk, but we're looking for connections to the banking system and things that might, result in contagion. We don't see those right now. What we see is
sorry about that. Back everybody.
A correction going on, and certainly there'll be people losing money and things like that, but it doesn't seem to have the makings of a broader systemic event. But again, we never give a clean bill of health.
Our
we just keep
volatility
watching.
will down.
We don't see those characteristics though right now.
Oil.
Let's go to the balcony.
Elevated.
And remember to share your name when you begin your question. Great.
Hi, my name is Cody. Thank you so much for being here, Mr. Powell. My question is about whether international relations has impact on your decision making. I know you mentioned that the Fed's job is to do exactly what's
semiconductors,
best
potentially
objectively for the American
micro
economy, but I'm
and
wondering,
shoulders.
If you're competing with, let's say China
So
or
we'll
other
watch
powerful
that.
countries, whether or not you would kind of, cut interest rates or do something like that to stimulate the economy to kind of get ahead of other countries.
No, it doesn't. You know, we're always asking the question, as you suggest.
Q, we have a large
We serve the American
up and
public
handle.
always in all of our decisions, and what is best for them? How do we achieve maximum employment and price stability on a sustainable basis?
This cup.
That's what we're always asking. We do, you know, meet with, you know,
Starting to
in
have the
Basel,
handle.
the central banks all meet without
Expecting
the
the
finance
breakout.
ministries, and we can talk privately
This
about
also
what's
gives
going on in
us
global financial markets. It is a global economy. We all know each other, and
a
frankly,
head and shoulders
many of us
or
have
a
regular
inverse
communications
head and
going on
shoulders.
just privately, you know, or you know, by telephone, or email, and text, and things like that. But we're never looking to
So we're
to
looking
get
for that.
on the turf of, you know, the national security people or the you know, the State Department, or you know, things like that. We're not looking at things that way. We're looking at our goals.
Spy,
That would
much
be,
of the same
I think,
thing.
a classic case of mission creep. If
Do
we
have
were
a
to
little
say,
bit of
hey,
a head and shoulders here. We do have to be
let's
cautious of.
deviate from just chasing these two goals, and let's do something for a third purpose. That would almost by definition make us less effective
And
at the things
our
we're supposed to be doing,
BVIX
so we try to
is
stick to that.
slightly elevated again. It is back up to the
David, you're
130. So we do have to be cautious
Good
of
morning.
this breaking
My
down.
name is Jenny, and thank you so much for coming. We're all very honored that you took the time to come. So last lecture, we learned about soft landings and about how it's definitely much more ideal than hard landings, but in the US history, we've had far more hard landings than soft landings. And we were just talking about how it's really important that you are monitoring expected
Very likely
inflation.
this is a 5-minute 20 mod
And I
test.
think a lot of that just
20
comes
mods
down
at
to the
the
trust between the public
636.25.
and the central bank. And the central bank is known to be much more technocratic, but I think especially with like the rise of populism and previous events, there seems to be a lot of
We are seeing this head and shoulders
impact
playing
of, like,
out on
political
semiconductors.
tensions between or
Well,
cooperation
that is
between the Fed chair
fairly
position
bearish.
and the administration. And I wanted to ask you, how do you still keep the public's trust this way?
By sticking to our
However,
jobs
NVIDIA
and doing them well, ultimately.
still
if we
holding bullish
deliver
structure.
the maximum employment and price stability, or at least are
So we
seen
will
to
be
doing
watching
everything we
for
possibly can as we meet
this
various
inverse cup
shocks
to
and
close.
multiple supply shocks in recent years. The public keeps its faith in us. And if you look, you know, we look at things like longer
We do see a rejection here though, to the
and
upside.
you'll see that they've remained
Then
pretty well
that does
anchored
turn
right
into a
through
cup
all
and
of
handle,
this.
but
You know, so if you
so far
really
this
think
is
inflation's
looking
going to
like
be higher, you can make some money betting against that. But people
an
don't do that. You know, the people who are putting their money to work in the financial markets. Not to give too much credit to that, but that's it. If we stick to our knitting and we do our jobs, we stay out of politics, stay out of the hot political issues of the day, and just do your job and keep your head down. I think, you know, I see this through
still
my dealings with
elevated.
elected people.
Back up
You
to
know,
the
if they get the sense
130.25.
that you're not there to deliver talking points, you're there to listen to them, and you're really somebody who's committed to doing your job and sticking just to that job, and that's all you want, and you're not going to get into politics, that's what we need to do. And I think generally, I think we are accepted in that spirit in Washington.
Now, if
and I
NVIDIA
think-
can get the
I think
bounce
generally
here,
around the
then
country as
the
well.
whole market should see
Jason.
the 142 level or the 642 level that we're expecting.
Remember to tell us your name.
Because the bounce from here does take us all the way back up towards the
Chair Powell,
170
for being
range
here. My name is Jake.
on NVIDIA.
As you know, your term ends in May, and a potential successor, Kevin Warsh, has indicated a desire to cut rates if he fills the role of chair. What is your take on the effect that a cut would have on the flexibility of the Fed to remain well positioned to maintain both sides of its dual mandate, particularly given the fact that inflation has remained elevated above the Fed's 2% target for several years now, and progress is further halted by the oil shock and tariffs?
Yep,
especially?
still looking for the upside currently.
Jake, that's not something I'm gonna swing at, that pitch. Is that a Red Sox jersey, by the way?
I called on him.
Yeah. Okay. I know this must be Red Sox country.
So we're going to go to the balcony next.
Still anticipating a
Hi,
bounce
my
out of
name is
SPY
Amy
here.
Candido. So earlier you said that you don't know how much you believe in something until someone tries to take it apart. So my question was, what's the thing you currently believe about the economy that you're least confident in?
Interesting question. I'm not going to give you a particular individual thing at the moment, but I will say that I would say this,
You
and of
need to
course
see
this
this
is
bounce out in a
self-serving
video.
to an extent, but having worked in the private economy for most of my career, I don't have any predisposition to believe that models can really capture it, because so much of it is animal spirits, as Keynes called it, and
It's
also
pulling down
it's
slightly,
again, I go back to the
or the
weather.
VVIX anyway.
Will we ever be
Is that
able to
130.08?
predict the weather with any precision three months ahead, other than the seasons? So the economy, no one has been able to really successfully predict the economy. So I think the temptation is always to place too much sort of stock in in models or in one particular outlook. The other thing is, another thing which is a big takeaway is, about fat tails, right? So famously there's a normal distribution and the tails are what they are. It's not a normal distribution. The tails are fat, and however fat you think
Still
they
looking
are,
for that
they're
pull
fatter
down
than
in
that.
the VVIX. It's currently at
Possibility for the economy
130.
at any given
Nope,
time
just
is
got that pull down.
so much broader. For example, the pandemic
129.86.
inflation. We'd
We
spent
are looking
15
for
years
this to pull
with the
down
inflation
much
below
further today.
target. And that was at a time of QE and lots of fiscal stimulus.
But this should
and
give
that
us
kept
our
the inflation
bounce
below
that we're
target.
looking for.
And people, pretty much the profession had, the big problem the whole profession was trying to solve was, how do we get inflation up to 2%? That was really the problem. And then along comes the pandemic inflation, and bang, suddenly
Just
you
need
have
this
a
bounce on the
40-year high
video,
inflation.
and we
So
should be good to go.
It's hard to keep your mind open to just how broad the possibilities are.
Take down here, yes.
Hi, my name is Robert. Thank you so much for being here. I'm a first year studying econ, math, and philosophy. So many economists that I've listened to, at least retroactively, say that what we really needed during the COVID pandemic was around $3 trillion, and the government printed something along $6 trillion more than that. And so inflation rose, but that money is still out there. So if rates come down, obviously you took initiative.
Still
and
need to
raised them
see
very
the
significantly.
VVIX pulling
If
downward.
rates get lowered again to, let's say, 2 or so percent,
Still holding the
do you think that the
129.91
price spikes
range.
have already played out, or do you think that all that extra money being out there will, on top of instability geopolitically, do you think that's going to push us back into an inflationary spiral? And then also I was wondering, for your next press conference, are you going to start it with good afternoon or hello everyone?
Let's talk about that later. Sorry, the first question was
the expansion of the money
Potentially
supply.
can be seeing
I
a
think
head and shoulders
monetary
playing out here.
commodities are a very challenging way to try to
Have to be
think
very,
about
very
inflation
cautious.
and the economy. There was a time when the
Sorry, my
profession
cat
thought
keeps
that
pumping my arm every
monetary
time I try to
quantities and
draw.
inflation were tightly linked, and of course, in an abstract way or in a simple model, it makes sense. If you don't increase the amount of goods and you double the amount of money, then the price has to go up. But there has been relatively little correlation, and my story of the pandemic inflation would not
Looking
be
for this
about
20
monetary
mah
quantities mainly. I'm not
bounce to
saying
the
it might
upside.
not have played a role.
20 miles at the
It was
636.23.
You did have a lot of stimulus, particularly in the United States. At the same time,
Check our
we were
volatility.
looking at the possibility of another Great Depression. We didn't
30.03.
know
So
whether
again,
there
we
would
want
ever
to see
be
this
a
basically
vaccine.
below
We didn't know what
127
this was gonna
today.
be. How many millions of people was the disease going to kill? So literally, for the first time probably ever, we're looking at little alternative simulations that are a Great Depression lasting many years.
Still
So we did a
looking
lot
for
of
this bounce out
stimulus.
in the video.
And then when the global economy reopened after shutting down,
On the 1 minute
you
time
had this
frame, it is
burst
pulling
of
away from the
demand,
lower
red-hot
Bollinger here,
demand and
not
constrained
closing
supply
this
still.
full
So automobiles is a great
inverse
example.
cup, which is a
Everybody
bullish
wanted
signal.
a car because they didn't want to
Excuse
take
me.
public transportation, and they'd all move
If we
to
can
the suburbs and out
continue,
of the city. So
then
I
this
need a
will
car,
be
and
a
yet you
cup
couldn't
and a
make
handle
cars
to the
because
upside,
you
even
couldn't
though
get the
it's a very
semiconductors.
deep
So
handle
you're
on this
looking at a
cup.
vertical supply
As
curve,
long as
so a
the
little bit of
cup has
demand
not been
drove prices up
invalidated,
a lot.
then that bullish structure still
Then,
holds.
of course, we took
So
the view,
we are looking
our
for
colleagues
that
and I did,
bounce,
that a vertical
not just to
supply
the
curve
upside.
works both ways. If a little bit of demand could
Should
bring that
clear
price right
basically
down, And also,
this,
it won't be vertical forever.
let's
It'll
see.
start,
Sorry, I
you'll
can't
get
talk very well right
supply
now.
side healing. You got those two things.
168.27
It was
should
always both
pull
supply
back
and demand
all the
for
way
me.
to the
And you got
high of
inflation
the
coming down
day.
very sharply in 23
So
and
that's what
24.
we're looking
We
for
got
out of
close
pretty much the
to the end of
majority
your
of
question, we
tech.
got pretty close to 2% in by the end of 24. Now we were just dealing with the effect of tariffs, which have largely fallen here in the
We're
U.S.
looking
and
for
not
this bounce
abroad.
to the upside.
They've been less than
Close this
expected because the
smaller
other side,
cup, which is
others
also
didn't
a
retaliate, and
handle
also
on a
because what was
larger cup.
implemented was less than what had been announced.
So we are looking for that.
Nonetheless, that was the piece. We were at about 3% inflation, and somewhere between 0.5 and 0.8 of that
Top of this cup is
from
at the
tariffs. So we've been pretty close to 2% all this
638.77.
time.
So we still
Now we
have
have another supply
roughly
shock coming.
$2
You know, it's one of
upside
those
to
times where you
close
get a
this cup.
series of supply shocks.
Now I
First the
want to
pandemic,
look
then
at
the much smaller one from tariffs,
volatility.
and then we're getting now an energy shock.
Or
No one knows how big it will
VVIX.
be. It's way
Even though I
too
don't look
early
at
to
the
know.
structure too
As I
much,
mentioned, we do
starting
think
to
our
build a little
policy's
bit
in
of
good
a
place,
head
so
and
let's wait
shoulders
and
here.
see.
Can potentially
So one
tell us
last
that
question.
we could be looking further down within the VVIX today, which that would pulse towards that
Hi, Mr.
127.
Powell. I'm Lola, and I was wondering at what point does the size of the US's debt break the point of natural systems repayment, and if that's something
The
you're
upside
worried
looks
about
very
now,
good though.
or something you think our generation should
Very,
look
very
out for?
tough day, let me tell you.
I
Today was
don't
a very,
think we
very tough
know
trading day.
what that number is, or
But
sort
this
of
upside's
ratio of
looking
debt
very
to
good so
GDP.
far. We
We're
should get our
being
upside
probably there,
break.
of course, Japan being a great example. There are countries that have much higher levels of sovereign debt to their GDP than we do. What's clear is that our debt
did
is growing much
see
faster. The federal
Micron.
government debt is growing substantially faster than our economy.
No, it has not.
And
It
that
needs to
ratio is
retest
going up,
the
and in
5
the long
mile.
run,
So
that's kind of the
just need to
definition of
pull back up to
unsustainable.
340.
The level
build
of the debt is
support
not unsustainable, but the path is not sustainable. And so
between
it's
Micron,
really important that we
Nvidia,
get
and
back to, we don't have to pay the debt down. We just need
Broadcom.
to have
We need to find support
primary
building.
balance and
We are
begin
seeing
to have the economy actually growing
5-minute
better, growing
inverse head and
more
shoulders
quickly than
on
the economy.
Broadcom,
It will,
which
it
that
will
is
not
bullish.
end
That
well
is what we want
if
to
we
see.
don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit
Would
myself to
take
those
us all the way back
high-level
up to the high of the day.
points which essentially everyone ignores.
So looking for that to complete.
So we're going to thank Chair Powell, but let me just describe the
Dig
sequence
still
of
buying
events
to
that
the
now
upside.
follows. So first we'll thank Chair Powell.
Have cup
Then
and handle.
anyone who wants to is welcome to join us on the stage, and we'll take a group photo
Okay,
with Chair
so
Powell.
this
Because of
is
a
done.
tight schedule.
Okay, so the speech didn't really provide much of anything. It was just a Harvard speech. Still looking for our upward break within NVIDIA. Slowly getting it, but we need to see all the way back up towards the 168.23. So truly need to see that full upside taken. We could Q. We can still potentially be seeing a head and shoulders here. So again, we need to see the full upside of this up here taken, or else this can still break down. It very well could be. It very well could be. Now, the thing that I'm looking at here is that on the 5-minute time frame, we do have this potential right shoulder. We do have, plenty of liquidity to create a left shoulder. But on the 1-minute time frame, this right shoulder is starting to come invalidated a little bit. Now, it's not at that point yet. We start pulling back down. We definitely can complete this right shoulder. With that right shoulder completing, that would take us down to the low of the day. However, this upside cup is looking very, very strong so far. So as long as we don't see this micro inverse cup to the downside take, then our upside should be good. Now our volatility still very, very elevated in here. Did pull down all the way to the 129.33, but it is back up to the 130.06. So we have to be very cautious. If we see the volatility continuing to pull upward while we're at this position on SPY, then this can allude into that larger head and shoulders. So not out of the woods yet. Would be nice though. It'd be nice if they'd give us our clean break already, one way or another. Today has been a massive chop fest, even though there's a lot of structure in it. It's been very, very, very choppy. Volatility, 130.03. Oil's still very elevated. Now, if we do see this head and shoulders break down, or complete the structure, then it would invalidate the cup that has been added on the day. So far, this micro cup is looking very good. The cup and handle breakout to the upside so far is looking very strong. Volatility slowly pulling down. We just need to see a very large pull down in that. And I want to look in NVIDIA again because pretty much the entirety of the market is sitting on NVIDIA and Broadcom and Micron right now. So need you guys to start buying already. Broadcom, if we can get our upward break, that would create a much smaller inverse head and shoulders here, which would also complete a smaller up and handle, which would also complete this larger inverse head and shoulders, which again, that takes us towards the high of the day. So we are looking for that upside breakout. Let's check NVIDIA. Apologize for yawning. Today is very, very boring. Shouldn't say boring, it's slow. Very slow. And volatility starting to pull back down again. So again, we need to see that entirely defeated, which would give us our upward break. So we are looking for that. Pretty sure I've yawned probably 20 times in the last 30 seconds. Apologize for that if I'm putting anybody to sleep. Now, this breakout is looking very good. Okay. And I want to delete that cup just to show this here, is that we're back in this liquidity range. Okay, even though on the 1 minute time frame we are pushing into the upper Bollinger, I don't really care about that. 5 minute time frame, this is turning very much so into a very large cup and handle. Looking very, very strong to see our entire upside taken for the day. So that's looking very good. The right shoulder has not been invalidated. So while it does look very wonky, technically this can still be a head and shoulders. And we're seeing that within this very small head and shoulders here, potentially, okay? Assuming, if we don't break up to the upside, then potentially we can form a smaller head and shoulders here, which would form that much larger right shoulder. So while I don't expect that, that's something that can happen. But really what I fully expect here is pull back up to that 638.77 from that range, build a little bit of bearish structure at the top, head back down. It's going to look very, very choppy for most people, but that should be the breakout. It's when we get that handle formation on this smaller cup here. So that's really what we're going to be looking for. Excuse me. 5-minute time frame. Showing a lot of that same thing. Hold on one second. Let me look at Microsoft. I'm pretty sure we identified a cup and handle there. Um, but I do want to double check that. And I will answer the question of why today I have such a bullish thesis. Before that though, I want to show this on the 5-minute time frame. Okay, because this is coinciding almost to the T of what we're expecting for the bullish upside. And I'm going to delete this cup here to show this again. Okay, a lot of time on this, so I do want to show this quickly. All right, so with our 5-minute time frame, we are expecting this upper Bollinger to be pushed into. Well, what happens on the 5-minute time frame when we push into the upper Bollinger? That's when we generally short. Okay, and why do we short? Because we expect to go from the upper Bollinger to the 20 ma. Now the 20 ma is pulling back up. It's currently at the 636.50. So building support on this cup would create the the conditions to retest that 20 ma. From that 20 ma retest, very, 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 very likely see the full breakout on the day. So multiple positions to be taken here and short the top of this cup. I'm personally not going to just because I do have to go in a few minutes here. But there's a very nice short position here all the way from this cup top towards the towards the 20 ma on the 5-minute time frame. I can't talk today. I apologize. And on the 5-minute time frame, or no, let me step back that. With shorting the top of this cup here, with today having an elevated volatility, even though it's pulling down slightly, it's still super elevated, okay? Um, with volatility being elevated, with oil being very, very elevated. Now I haven't checked the news to see if, anything's pushing it down very slightly. Nothing in the news right now is doing anything very significant to oil currently in terms of the price action we're seeing within this moment right now, because we would be seeing oil pushing down very quickly or buying up very quickly. Currently, we're just seeing it hold this, essentially this 126 through 128 range. So nothing really within the news right now is going to be super noteworthy. Very, very likely going to see the top of this cup hit here. And again, top of this cup is at the 638.77. So truly should be expecting roughly that 639 to come in. From that 639 creates the conditions for the short. And that is a bullish short. So you're shorting for bullish reasons. You're shorting for the bottom of this handle at the 20 ma here. When we get back to the 20 ma, you would be looking for bullish structure to suggest that we are going to be having that upside breakout. Okay, so that's what we're looking for currently. Now, I want to circle back to our volatility. Volatility still very high, but it has been pulling down from where it was today. It's currently at the 129.33. Did pull down on the way to the 129.17, so a lot is suggesting that we're going to be seeing that buying upside that we're anticipating. Now let me go ahead and look at Microsoft. Now on Microsoft, and I'm going to show the 30-minute time frame. This is that cup and handle we've been looking for. Truthfully, Microsoft should be seeing all the way back up towards this 368 range. Everything within the structure today is telling us that it wants to do that. That looks like a micro cup right there, but potentially this could be forming a temporary top of that cup. From the top of that cup, we're going to handle downward prior to fully breaking out. So that's what I'd be looking for from Microsoft. Now, it is at the 20 mile here on the 5-minute time frame, so a a break back up to the upside here would create a micro cup, which would mean that you wouldn't need this massive handle downward. That micro cup would expect a micro handle into the breakout. So that's something to watch for on Microsoft. Now, the reason why I've been so bullish today, okay, let me go to the SPY really quick. Hold on. I want to look at the volatility very quickly. Still at the 129.33, so elevated, but slowly ticking downward. Okay, so here's why I'm bullish today. And this is purely because of a mechanic. I don't want to say I created it because, obviously the markets trade with my input being there or not, but it's a mechanic I did find within the markets. So it's these upper Bollinger and lower Bollinger moves. And on the daily time frame, usually when we have the day two of our, say, the upper Bollinger, we push into the upper Bollinger on the day one, secure that level. Day two, that gives us a higher high, and from that higher high, we then see a consolidation back down towards the 5 mile. Now, the lower Bollinger works the exact same way. We have the day one lower Bollinger move. Day two, generally see a lower low. From that lower low, start to consolidate upward towards the 5 mile. This is something that I have back tested, and I do want to show this, excuse me, on the drawings here, but the drawings are absolute mess. So maybe I could show this on the SPACs. Hold on. Of course, my SPACs drawings are also a mess. Give me one second. We'll do Spaxel. Okay. So I'm going to circle some of these lower Bollinger moves in here. Lower Bollinger. And these will all be the day two lower Bollinger moves. And technically, today is the day two, even though it doesn't look like it on the chart. Now, what's something you see happen every single time we go from the lower Bollinger and we retest the 5 mile? Every single time. Sometimes we can get, excuse me, I can't talk, my voice is giving out. Sometimes we can get those movements where we have an extended um, lower Bollinger move. This is not one of those moves right in here. As you can see, there was the 5 mile retest right there. So 5 mile retest, pull back down to the lower Bollinger, So there's two lower Bollinger moves in there. And you can look at almost any symbol that excuse me, is algorithmically traded. So, not some tiny small cap company. Larger companies, larger funds, larger ETFs, you'll see this exact same trend within every single symbol. Okay. Um, I'd be surprised for you not to see this trend. I have not seen a single symbol to not hold this trend. Um, and all the back testing I've done on it has shown almost every single one of these hits exactly. So that's why I'm very bullish today. Um, Once we start pushing the lower Bollinger, that's really telling us that's the end of the road, or that's the edge of the road, and that with being at the edge of the road, we need to pull back onto the road. And that's kind of why, even though it looks silly, why I have the Bollingers in these very, very thick white lines to kind of mimic a roadway. Um, and I want to stay within the road. Once we pull off the road, um, market doesn't like to be there for very long. It generally likes to trade within the roadway. So that's the whole thesis and thought process behind that. Um, Even though, again, the conditions today look absolutely terrible. Um, if I was just looking at the market without understanding some of those mechanics, we have our VVIX absolutely super elevated today. We have oil super elevated today. We saw a ton of selling right off the cuff, uh, you know, or right off the open. Plenty of signals that would have tell us that we're going to absolutely, just dump for the rest of the day. But with those mechanics, it does tell us that we should be seeing that support buying reprieve. So yes, I'm still holding the TQQQ. Always too many Qs. Um, I'm still holding all the TQQQ positions. I'm still holding all of my calls. I'm expecting this week to really see a lot of buying reprieve. I think it's going to throw a lot of people off, but potentially we could see the market all the way back up to the 660 this week. Um, or even into early next week. Now, with this week being a 4-day, um, 4-day trading week, we do have Good Friday on Friday, so no trading on Friday. Um, Usually the weeks that tend to have holidays usually tend to be more bullish. Now, I don't know if that's because the shorter weeks we see more of that algorithmic buying, where the algorithms kind of just take over the wheel and just hold the levels while, people are out on vacation or whatnot. I don't know if that's the reason why, but a lot of these low news, low volume, holiday type days and weeks can really lead to some massive, massive buying. Even in some of the most bearish conditions, we've seen days where we're expecting a huge red day and then it's some 1 to 2% plus buying day. So the conditions are all here for us to have a really, really absurd buying day. Definitely like what I'm seeing overall within the market. Again, really what I do want to see though, I want to see our VVIX pulling down to this 127. That's really going to be indicative to me that we will be easing up some of that selling pressure. Um, our oil, I really don't anticipate our oil pulling down currently. I think that with I believe I think we have over 12,000 Marines stationed near Karg Island right now. Um, 99.99% we're going to be going for the invasion. So, do I expect oil to really have any form of reprieve in the very, very soon future? No. If anything, we might see it pull up towards that 120, 29 range that I talked about, where, that'd be challenging that decade high level. So that can definitely weigh against the markets quite a bit. Um, Something we have to be very, very, very concerned about because when oil prices are elevated, that generally elevates the US Treasury yields. When the US Treasury yields are elevated, that generally elevates the dollar. Okay. The dollar currently as is at 152. So very, very elevated. Generally the dollar should be usually around that 87 to 93 range, which we haven't seen for years. It's been a very long time since we've seen that range. We were starting to see that 95 to 97 range, but ever since the oil conflict started, the dollar has begun to elevate again. And really, you can track the elevation within the dollar by almost monitoring just the treasury yields. The treasury yields, even though they're basing the yield percentage and everything off of the treasury rates, the whole treasury yield is kind of just a basis of how much the dollar is worth in that current cycle. So when we see the interest rates being higher, generally we're going to see a higher dollar. Um, as you can see currently within our current cycle, we started to see the dollar pulling back up, and all of a sudden, we're hearing talks of potential rate hikes, things like that. So this is a very good way to, measure the strength of the dollar is by watching those treasury yields. But I'm not expecting the dollar to pull down anytime soon. I'm not expecting oil to pull down anytime soon. I'm not expecting treasury yields to pull down anytime soon. So we do have a major bearish weight holding against our market, and that's going to be holding against our market for, a considerable amount of time. Now, with that said, from a dealer's point of view, does that mean we just sell off and be done until the war is over? No, not really. From a dealer's point of view, I'm still going to sit here and trade the market. I'm still going to sit here and buy and sell as I see the orders come in. So, um, seeing this buying reprieve is something I've been really, really expecting and anticipating. I was expecting it the prior lower Bollinger move. We did not get up all the way to the 20 mile here, so I am expecting it this time. Now, the 20 mile on the daily time frame is at the 662.40. So again, our upside is absolutely massive, over $20 right now. So, um, that's really what I'm trying to target. The downside here is telling me that, really our downside's not that much. The lower Bollinger's at the 634.50. So that means if we technically try to aim for that lower Bollinger today, we would push into that 633 range. From that 633 range, we would see a lower low very likely. So what? That's 628, give or take. And then from there, chase that reprieve support bounce again. So I'm not really expecting that cycle to occur currently. Generally, you do see the 5 mile retested between each lower Bollinger move. Again, you generally go from the lower Bollinger to the 5 mile, lower Bollinger to the 5 mile. If you're going to be within that selling or major buying posture. So we have been seeing that ongoing for quite a while now. I believe it's been either 21 or 23 trading sessions since we've had a true 20 mod test. So even being bearish on the market, we should be expecting that upside. Sorry, I just kind of went on a total rant for a while, but um, hopefully that answered some questions that nobody asked. But that's kind of what I'm expecting out of the market for the day overall. Now, with that said, we do again we want to see our volatility breaking this 127 range. Um, if we can see our volatility breaking that range, that's going to tell us that very, very, very likely, not only do we break that range, but we start trying to head back towards this 119. Now, do I expect to head to the 119 today? No, but that definitely alludes to pulling up throughout the rest of the week, pulling up into potentially early next week. So this is looking very good as long as we can continue seeing it pull downward. It has pulled down all the way from the 134. So very, very good signal so far, but it does need to continue doing the work it needs to do. So now, if anyone has any questions, right now is a really good time because I will be ending the stream fairly soon here. But we should be expecting again um, off the 5 minute time frame. Let me go ahead and hide the moving averages. I want to delete that. Want to delete that and that. Is that currently we did see the cup fully complete. With this cup being fully completed, with this upper Bollinger range being hit, we are expecting the 20 mile here to be retested. 20 mile is currently at the 636.81. From that 20 mile retest, that should give us the buying to the upside. Now that buying to the upside, at the very minimum, should be all the way back up towards that 640.37 for today. But with the daily time frame, the 5 mile is currently at the 645.31. So even buying up towards that 640.30 something range today, today is still telling us that potentially we do have a full $8 upside. So today could be a very large buying day to the upside if we see the true breakout that we need to see. Now, once we do complete this cup all the way back up to the 640.37, do keep in mind that we should be anticipating bearish structure, and from that bearish structure, a handle downward into pulling up. Okay, so that can happen today, that can happen tomorrow, but this is really what I'm expecting to occur, is that I'm expecting this cup to close towards that 640. I'm expecting our volatility to pull down towards that 127 and for us to fully get the breakout. So I would not close your put hedges here. Unless we truly do see the full cup taken. And with this cup taken, this gives you room to actually exit your put hedges because we should be anticipating some downside anyway. So that downside um retest, very likely on a 20 mile, will give you a very nice exit on the puts with higher volatility. Even though the puts might be worth more in the current moment, it's better to stay hedged, especially that we haven't completed this larger cup. This can turn into a double top here, and we're not out of the woods entirely yet, even though our upside looks extremely good today. Again, we have to be so, so, so cautious when we have oil. We just had a breakout to the upside, so I want to check the news, make sure nothing crazy went on there. See, Iranian president, any decision regarding the end of the war will only be made after taking into account all of the conditions raised and the context of preserving the honor, security, and the interests of the Iranian people. Okay, whatever. That doesn't really tell us anything. Um, Oil, very, very elevated. That can absolutely pull against the market, so have to take that into great consideration today. Even though I am bullish overall. So the HIG is corporate credit, okay? And there's two different corporate credits I track. So there is the high yield, and then there is the investment grade. Okay, so that's the liquid and HIG. Now, if I was using my actual computer, I would have these on TradingView together to monitor the actual um just the spread between them to determine if we're actually seeing major selling or major buying. But the goal of these is that this is the upper echelon of equity investing. So even though these are based on bonds, technically HIG is an ETF tracking junk bonds. Junk bonds are those super high yield corporate bonds, but they're very high grade, okay? Which means that it's pretty much the top echelon of high 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 end equity investment, okay? If we're seeing selling in our highest echelons of equity investment, then that's telling us that very, very likely we're going to be seeing selling within the actual equities themselves. If we're seeing buying within this, then we're very, very likely going to be seeing buying within our equities. Because you don't buy the highest echelon of market risk to just have the market sell off. Usually not how that works. Generally, you see the buying into this to be able to profit from the spread and the yield and everything. So that's why I monitor the HIG so often. And with that said, we actually just had a million share sale on HIG. So um, it's a little concerning. Yeah, so a million shares just got sold there. So that's interesting. But with the HIG, sometimes that happens. Again, HIG is pretty much only institutionally traded. So within the shares can see super, super large buys and sells sometimes. But this million shares sell is a little extreme. Now, semiconductors, again, we do want to see some major buying out of semiconductors. Micron has just been pretty much pulling down the entire day. The video looks very good though. It is forming a lot of this bullish structure that we want to see to the upside. So the video is looking good for the breakout, but I want to circle back to Broadcom, which is Avgo. Avgo's looking very, very good in here. Extremely likely we're going to be seeing our breakout within Broadcom. So that looks absolutely awesome. And what else do I want to see? Want to look at volatility one last time? And our volatility, even though it is pulling up very, very slightly, it has been pulling down very aggressively today. But again, don't let that fool you. Every single penny upward that the VVIX moves, that does mean that the dealers are having to pay more to ensure their positions. So every single penny matters here. Again, I am looking for this to pull down towards the 127 range or below, but we can see this curl back up, especially when we see oil jumping back up to the 128. So definitely keep your eyes on that. Yeah, 128, 129, but having a pretty large breakout here. Something's going on. Even though we were seeing all that bullish structure occurring to begin with. So I want to look at the news or head out here just to make sure. Okay, so not really seeing anything in terms of the news. So our upward breakout should be absolutely fine here. I am a bit concerned about semiconductors. We'd see semiconductors selling when Nvidia is still holding its range, but this is largely because of Micron. Because so far, Broadcom has been buying upward since the selling of today, and so is Nvidia. So very, very likely the large selling in semiconductors is from Micron. Just have to be careful because that can, lead into further selling in the day, which obviously we don't want. We're trying to catch the call breakout. So and how did I spot the SPY put to the 20 mile on the 5 minute? So let's see. So I want to, and I'm assuming you're probably thinking this put right here. Now, the reason why I saw that put, which I didn't take, again, I was very specific that I would not take that even though it looked very good. Um, the reason why I did take that is because our structure here has this cup closing. And on the 1 minute time frame, we saw that we had the cup closing to the 1 minute time frame. On the 1 minute time frame, with that cup closing, we do expect a bearish push downward because every time frame sort of works the same, even though they'll be trading between the different levels at different times. But from this upper Bollinger on the 1 minute time frame, that does tell us that the likelihood is we're going to pull back towards this 20 mile range, which for this, that creates a handle on our cup. Shorting the top of cups are always really good because either you're going to get the handle, and from that handle, you're going to have the breakout to the upside, or you just see the entire cup become invalidated, and that short position becomes super, super ideal. But with us pushing into the upper Bollinger there on the 1 minute time frame, this did create the conditions for us to push up or for us to pull down to the 20 mile on the 5 minute time frame. Because we were very close to that upper Bollinger as well. We did complete the cup. We are already looking for that bearish structure. The 20 mile at the time was at, well, it's basically still there, the 636.81. So all the conditions were there to create that handle downward, which created a very quality short position. Same thing will be, applied up in here once we complete this cup, because either we're going to get the liquidity building to the downside, retest that 20 MA or whatever support range we need to retest, create the handle to the breakout, or we're going to see this cup fully invalidated and fully break down. So I always really like shorting the tops of cups, even though for some it won't make sense to short into a bullish structure. Um, they become some of the best short positions for me. So volatility pulling back up, but still down from where we saw it this morning. But we still have to be very, very, very cautious. And I do want to look at NVIDIA really quick before I take off. Now, NVIDIA here, super heavy consolidation. So one thing that I'm looking at is that we had this inverse head and shoulders here. That led to the breakout, which was expected. So right here, that is bullish structure. Okay. Now, from that bullish structure, we now have a new structure here. And we need to determine if this is going to be, again, more of that bullish structure to the upside, or if we're going to see this create more of a head and shoulders to the downside. I'll grab the top of this. So that's what I'm looking for out of NVIDIA, but we are still within the bullish conditions. So we have not hit the bottom of this cup yet. So as long as we do not go into that range and then validate this cup, then our upside looks very strong. But if we do see this invalidation of the cup here, then that creates the inverse cup to the downside. So we would be expecting bullish structure heading upward to continue down. So a lot of microstructure in here, but within the overall day, hopefully it makes sense. Should be leading to a upward breakout though, overall. Especially because we did see the breakout of this first structure, which was very bullish. Should lead into the breakout of the secondary structure being bullish as well. And I want to circle back to the VVIX. So it did pull up to the 129.28. Now pulling back down to the 129.18. So that's good. We want to continue seeing it pull downward. So yeah, I think I'm very, very likely going to end the stream here. Oil all-time high, it looks so very likely. It looks extremely, extremely likely. I know that USO chart doesn't really show it very well because unfortunately with Weeble it doesn't show some of the prior USO splits and everything. However, basically this 129.92 in here back in 2018, I forgot which happened, but I believe that's when we uh you know killed one of their major generals, if I remember correctly. I'm just reading what the news says really quick. Nothing interesting there. But that's when we killed I forgot which general it was. Soleimani or something like that. I don't remember. One of those guys. But that was that major oil spike. I believe that was the highest all-time oil prices, if I remember correctly. Let me look. Let me look at the crude oil main. Let's see, CL. Monthly time frame is only showing us back to 2018. Oil currently at 103 a barrel, but I'd be highly expecting it to pull back up towards the 120 range. So not a good thing for the economy, fortunately. Yep, yep. Have it marked down. The thing about the crude oil main though is that sometimes in the after hours and whatnot, it doesn't track the price action like the USO does, which the USO doesn't give us the actual crude oil price, but at least we can see what is going on with it. I can actually find it. Semiconductors continuing to push down while we're still seeing chop out of SPY. Nvidia again. Video, we have to be very careful of this, fully breaking down. It hitting that 166.27 would sort of allude to that, but if we can build support prior to that, then that would be a cup and handle breakout. You're very welcome. So yeah, everybody, I'm going to go ahead and end the stream here. I just want to take one last look at the VVIX. If we continue to see our volatility pulling downward, and if we can continue to see Nvidia breaking to the upside, then we should see the upside break that we're looking for. However, if we see volatility spike back up, if we see Nvidia, um, you know, break back down and break the bearish or the bullish structure that we saw previously within the day, then that would allude to SPY hitting, um, that day two lower low of the lower Bollinger. Now we did hit it within the pre-market or, during the after hour sessions and everything, but doesn't really fully count, because obviously we didn't get the move to actually buy into that. But the technicals of it still do apply. We still did get that lower low of the day. So yeah, I'm looking for the VVIX to pull down and for some buying to be present within everything. And hopefully we don't see some head and shoulders breakdown. So that's what we're looking for. But with that said, I will be making a video tonight and I will be streaming tomorrow morning. Again, this week's streaming schedule will be a little wonky because we don't have market on Friday and I am having a minor surgery on Wednesday. So I'll be streaming, Tuesday and Thursday to compensate for the Wednesday and Friday. So I will see you all either in tonight's video or tomorrow. But with that said, have a great day, everybody. Stay safe with your trades and